614 Startups Nation, welcome to another episode of the 614 Startups Podcast. My name is Elio Harmon, your host, and back in my favorite seat in the world, and I got a very special guest for you, my man, Todd Fetterman of North Coast Ventures. Todd, welcome to the show.
Thank you, Elio. Awesome to be with you.
Yeah, man. Sometimes I get guests that I'm super excited about, want to get them on the show. And then I go back and look at my LinkedIn thread. And the last time I agreed to send them a link to get them on the show was like 2017. So my apologies, man. This conversation is a long time coming.
All good. This is our moment right here.
Yeah. That's great, man. Well, exciting things happening for North Coast Ventures. But before we jump into all of that, we got to get to know you a little bit. So why don't you start with a bit of your personal and professional background?
Yeah, happy to. I grew up in Ohio, grew up in Cleveland, spent a lot of time here, started a couple companies, spent some time on the East Coast in DC, Baltimore, and Atlanta before coming back to Cleveland. At that point, I was married, I'd gone to school, had started a company, had learn some lessons when you start a company, even when things go well. It's a battle. So over those years, got to build, in this case, a consumer product, bar soaps, lotions, body washes, kind of classic consumer packaged goods. And as you might imagine, we made some great decisions, some bad decisions, good hires, bad hires, kind of as the thing starts to grow. So I'd say just learned a lot about both vision and humility, and just really gained a desire to work with companies trying to build something. I worked for a technology strategy consulting firm, spent some time at AOL in DC, which was at the time still a pretty big company, 10,000 employees, $1 billion plus, many billions of market cap. And kind of got a sense of, boy, those are pretty cool companies to see get to scale. When I came back to Cleveland, I met some people doing early stage startup work. I'd spent time around startups, but not on the investing side. So it was, a learning curve to get in there. But I was really intrigued with how many people were starting things, building things, and also how much interest there was in funding entrepreneurs right here in our own backyard. And it's been a fast 15 years, but over that time, we've invested in 65 companies, put a lot of money to work, gotten some wins on the board, taken some licks, as you might imagine, and had a lot of fun doing it.
Yeah, so it's rare to find that founder now investor combo, right? You either see like the either or. So a lot of times founders are talking to investors who have never been founders. So you bring that founder perspective to the investor side, but I got to hit you with this, man, because sometimes the jokes just write itself. They always tell you founders should solve problems they're familiar with. Now, you got into the bar soap game. Are you trying to tell us something, man? Was there,
exactly.
Was there an issue that you were familiar with?
Exactly.
All right, man, I got to tease you. All right.
Brutal.
So North Coast Ventures, right? So you do your thing as a founder.
Yeah.
All right. And then essentially you go into the world of investing, and now you're starting another startup. So the history of North Coast, how did it come about, the process for starting that firm, your investment thesis, and then some portfolio highlights so far.
Yeah, absolutely. I'll tell you what we wanted to do, what we thought we were going to do, and then what actually happened, right? Which is a different set of developments over time. When I first came back, there was a group of people who were active investors in early stage companies. But I think there's a little bit of a mismatch, and it kind of points to just how hard it is to be an early stage investor, right? Because ideally you should know some things about the industries you're investing in, right? But individual angels might invest in software. Maybe it's business, maybe it's consumer-oriented software, medical devices, diagnostics, advanced materials, right? Nobody has depth across all those given areas. And I think the group realized that to be successful and to help a broad set of companies like that be successful in a place like Cleveland, there needed to be a higher level of collaboration. So the vision there, very much like it was in Columbus for the Ohio Tech Angel Fund initially, was let's pool people's time, energy, and capital and make better decisions together and sink or swim together on a lot of these deals. So there was strong interest. Jumpstart in Cleveland was a founding partner and made an investment in us to help get us off the ground. We went out and started it where there wasn't a fund before. So as you might imagine, we said, what do we want to be? How do we want to talk about ourselves? What should the website be? What process should we have? We went through all that and started looking at deals, diligence those deals, made some investments, served on boards, rinse, wash, repeat. And after a handful of years doing that, we found that we were in a really wide set of different types of technologies, because Cleveland has a lot of medical devices, a lot of diagnostics, in addition to software. And we probably were too wide. It's hard to be good at multiple things. And what we found over time was our group, but it's not to say that other groups can't be more successful in these areas, but our group was a lot more successful in software deals than we were in medical devices, diagnostics, advanced materials. And we found that was largely because we were just placing bets in those areas. We didn't have the ability to be as helpful to them along the way. We didn't have the ability to open doors like we do for software. So we really gravitated over time to have a thesis of business software. There are a lot of people in the Midwest solving problems with software, and that can still be a really broad set of areas, right? Healthcare IT, digital health, fintech, ed tech, insurtech. And we found that we were able to attract more and more people. So our first fund, we got 99 individual investors. As you might imagine, some of those people knew a lot about investing, some didn't. Some knew a lot about the things we were investing in, some didn't. But over time, with each successive fund that we raised, we were able to get a higher percentage of people who had the right industry expertise, functional expertise, and were willing to spend the time and energy to open doors. Because this early stage investing is not a passive activity. You have to really want to do it. You have to be willing to engage with entrepreneurs. You have to be willing to be patient, because it's not a quick thing. And over time, I would say we kind of found the groove, right? Which is for us to put focus around our investing activities in this business software, and for us to try to provide human resources to these teams to be helpful. And just as important as anything else, just as important as the money, is also that we can open doors, that we can help them navigate. And I'll save some of this for a upcoming question, I'm sure, but we really found that our secret weapon is door opening and helping entrepreneurs connect with customers. That's really hard to do, and I think we're getting better at it over time.
All right. Now, okay, so focus is super important. We all understand that, right? And thank you so much for extending the invitation to participate in one crucial thing, right? It's the idea that if you could distill something down to that one thing, what would it be? If you could only focus on one thing, what would it be? Now, you said you placed a lot of bets earlier. So did you have to go back to some of those folks and say, hey, man, I know we invested in you, but we're kind of pivoting. We're going to focus in these areas because that's where we're going to add the most value. What are your thoughts on that? I mean, if you do need to make a pivot, just like startups have to make a pivot, maybe out of a segment where they're serving a particular customer, how do you handle those conversations?
Well, one, it wasn't hard, is what I'd say at a high level. And I think the people who were running those companies understood that. It wasn't like people like me were super engaged in helping them, say the medical device people, on their clinical trial strategy or their regulatory strategy, right? We were not able to engage in a substantive scientific way with those portfolio companies. We gravitated to spending more time with those companies that we could be helpful with. Now, we didn't try to pull our money out, right? Once you're in the boat, you're in the boat. And we tried to be as helpful as we can. We wish them well. And because some of these founders are phenomenal and we're working on great technologies, their companies won anyway, right? So just because we found out it wasn't what we were best at doesn't mean that these companies were doomed to not be successful. It just meant that we weren't going to be as high an impact partner as we might in some other situations. So I think it's something we grew into that understanding. It wasn't obvious in year 1, 2, 3, or 4. It's something that we had to learn those lessons over time. And I think we're still fine-tuning that knowledge of where we can really be impactful and looking back how we might have done things differently, right? There are a lot of opportunities to learn in this business. The best early stage investors will still lose all their money half the time. And with that, it provides a lot of opportunities to learn.
Yeah, and that's great, man, because a lot of times as founders, when you want to make that pivot, you kind of replay these conversations in your mind about how you approach a customer and say, hey, I told you we were going to be able to serve you and solve this problem for you, but, we have to pivot. And I think that's important to point out to founders is like, if you know you have to make a pivot, you have to go in and have those conversations. And oftentimes the feeling is mutual. The customer probably has a sense that you maybe can't go to the level with them that you should to really get this problem solved in the long term. So that's a real gem there. All right, we're going to take a quick break. We'll be back with this fascinating conversation with my guest today, Todd Fetterman of North Coast Ventures. This episode is brought to you by Rev1. Rev1's mission is to help entrepreneurs build great companies. As you navigate the waters of business entrepreneurship, you don't have to go it alone. A strategic partnership with Rev1 connects innovators to the talent, customers, space, and funding you need when you need it. Get started with Rev1 Startup Studio by visiting rev1ventures.com to learn more. Again, the website is rev1ventures.com. 614 Startups Nation, welcome back to my conversation with Todd Fetterman of North Coast Ventures. All right, Todd. A lot of times founders we got to go out and talk to investors, but investors have the equal challenge of going out and talking to founders. So how do you think about finding and vetting investments? And then what's the investment thesis over at North Coast Ventures?
Sure, it is tough. It is dating, right? You've got to meet a lot of people. You've got to get to know a lot of people. You've got to be open and honest about what you're looking for, right? So that you attract the types of companies and the types of founders that you're hopeful to work with, and also that your honesty and candor also repels people who don't like that approach, right? Who don't want to work with you in the way that you'd really like to work. And so I think we've probably learned to over communicate that, whereas in the past, I don't think we were quite as deliberate about that. But we try to get the word out, be in places like 614, right? Telling people what we do, what we're looking for. And we hope that our network of partners and investors and VCs will also help guide people to us. So our group has 400 investors, right? We've got founders, technologists, business people, corporate types. So that's a lot of feet on the street. We should be able to sniff out all sorts of interesting opportunities. We're really hopeful that across the state, people know that North Coast at the seed level is writing $250K checks, that we want to get involved when there's an MVP. We want to get involved when we can help a company that's got just a little bit of traction, maybe a whiff of traction and product market fit to actually prove it out, get from perhaps 100,000 in revenue to $1 million in revenue. And I'd say our network of co-investors that have worked with us, know what it's like to have us in the deal and know what we're looking for, also refers a lot of deals to us. We get a ton of deals also from our founders and entrepreneurs. They probably know the most about what we're good at and what we want and need to see, and I think are able to make really quality recommendations to other entrepreneurs.
Yeah, that's awesome, man. And like you said, it's described as dating, and you just gotta talk to a lot of people, get to know people. But one of the things about the difference between a good and a bad date sometimes is even if you don't see a future for the person, everybody wants to feel listened to. Let's explore the process of becoming good at listening, whether you intend to invest or not. How do you really approach that? Because it can get, you talk to 10 people a day, by like number 10, you're like, Mike, I'm ready to clock out, man. I know I should be listening more deeply. How do you practice that intentional listening?
Yeah, well, I guess there's a line or a scene in Fast Times at Ridgemont High where it's this is our time, right? So if I'm on for a half hour, I'm on for a half hour. Right? We don't cut a call off early if it seems like there's not a fit. We'll leave the call communicating that to people, but I'm hopeful that I'll learn as much as possible. I'm hopeful that I'll be able to provide some feedback to the entrepreneur. And if we're not a fit, that we'll be able to point them in a right direction or give them at least an idea based on things that we've seen. So I really try to listen to understand what they're doing. We also know that we're not going to get everything. There are going to be great ideas that we miss. So I really want to make sure I get as much of it as possible, right? You hate to walk away from great ideas and great founders, but we know we're going to miss great deals. There's no way that we'll hit them all. And so our hope is to really spend the time to understand it and to give something of value back to them, whether that is an investor they should talk to, a company that might be a good pilot, somebody who might work for that company. And we hope leave them feeling like it was a good use of their time, knowing that a fund like ours can really only invest in 2 or 3% of all the companies that we see, and knowing that any good founder is going to talk to 30, 40 investors, and hopefully they'll have their pick of, the handful that are really interested in funding them. So I think we've got to earn the right to be in those conversations. And, I hope that the entrepreneurs feel good about having an opportunity to have that kind of conversation with us too.
Yeah, and I know it's challenging on multiple levels because that early in the deal, you're also looking at the founder or the founding team itself, right? As much as you would like them to understand the problem at a very deep level, you want them to have early traction with making some sales, an MVP, it's working, these things are deployed. You're also evaluating them as a person, right? Is this somebody I want to get, we're going to kill this dating metaphor, married to? So
Yeah.
what are some of the things that you look for in the founder themselves, setting aside a moment, the business?
Yeah. So there are different schools of thought on that. I think investors over time have probably made the mistake too much of looking for people that pass the elevator test, that they feel good about personally, that they'd be buddies with, right? There are lots of people in life who are really smart and going to be super successful, but aren't necessarily going to be your best friend for lots of reasons. So we try to kind of put that aside, right? And think about how exciting this person is, how excited they are for their vision, the extent to which this person can get fellow employees excited because they're going to have to recruit like crazy, the extent to which they'll be able to get other investors excited. And in our line of investing, B2B software, that they can sell something, right? Because you can have the best product in the world, but if your customers don't think so, you're not going to go very far. So we don't expect, this amazing oratory and a perfect pitch by any stretch, but we expect somebody who can look us in the eye and tell us what they're thinking, can help articulate what the vision is, why they're doing it. In our world, there are really no trick questions, right? We're trying just to understand what they're building, why, who the problem's being solved for, how big of an opportunity that is, how much better they think their approach is than what's next. And even when we get into diligence, there are no trick questions, right? We're trying to understand at that point, does what they have come close to what they've been trying to build? And when we talk to customers, for example, we're just trying to understand, hey, what do you think? You've used this product for 6 months. Help us understand it. So I think the more simple questions we can ask, the more we can internalize the entrepreneur's responses, the better sense we can get of just how consistent that entrepreneur is, right? Are they approaching us with consistency, with integrity, with the kind of energy that it takes to be successful? Because it's not that so many of these founders don't have a lot going for them, but it is a tall mountain to climb to build a startup successfully. And we've seen that mountain. We've tried to climb it ourselves. We've got the scars to prove it. So I think after you've done that a little while, you have at least some muscle memory and sense of what you'd like to see from an entrepreneur to get there. That said, you can't outrun your biases. We're going to be wrong a lot. There are ways that we're just not going to have the vision to see really what a founder is saying. And surely we will underestimate founders and teams multiple times and miss opportunities because that's the nature of human beings trying to evaluate other human beings. It's a really imperfect art.
Yeah, it is an art, and you're gonna have practice. Some mistakes are gonna happen and things like that. But to the point about enthusiasm and the ability to really go out there and be the evangelist, right, and attract people to the business. I saw a quote which was essentially, um, great founders are able to move from failure to failure without loss of enthusiasm, right? That hey, pick your head up. You're not only going to have to do it for yourself, you're going to have to do it for everybody in your company. And to your point about being wrong on the misses, the potential is also there that you're going to invest with somebody and you're going to not necessarily, be able to hash that out in the beginning. But how do you think about ability to learn? Because not everybody's going to show up on day one. They might have the potential, but that learning curve, man, because a lot of people are doing this for the first time and they've never seen this before. They've never gone that deep. They've never asked themselves that deeply of what it takes to really be a great founder. How do you identify somebody who has that learning ability, right? That they're coachable over time, they're going to get it. How do you think about that?
It's something that is super important. it's easy to fake that you have it. And it's hard sometimes when I think entrepreneurs know that that's something people want to see. We don't expect any entrepreneur to have all the answers. We expect them to have a bunch of hypotheses that they're going to test out, and we want them to be really confident right up until the moment they realize they're wrong on something. So, we try to ask them questions just to articulate how their hypothesis and vision has changed over time, some of the things that they've stepped back from and done differently. It's not bad as a question to ask, and also a question to ask yourself is, what happens if you find out that's not true as far as the hypothesis, right? Customers want this. What happens if you find out that's not true? What happens if X happens or Y happens? And then I think just get a sense for how people think about it. Again, there doesn't have to be a perfect answer as to where they go from there, but we really hope that the person is thoughtful enough and just wants to step back and get to the right answer, as opposed to kind of having their head down and just trying to power through something. Because it really is a learning exercise. And oftentimes there are just several loops in the development of these companies where your initial pilot customers may not be exactly like your early customers. And then when you start to get to scale, right? And it's not just crossing the chasm and the adoption curve and all those things, right? It really is sometimes as simple as the availability of the people around you, and that, your initial customers may not be as statistically accurate cross-section of the group that you're going after. So those learnings at every step are really important. And we hope we'll get enough capital in our entrepreneurs' hands, and we hope they'll build a plan that gives them a little bit of wiggle room, so that if things don't go perfectly in the way they hope, and they have to reorient and build more things, slow down a little bit so that they can go faster later, make hires when some of the early hires may not work out. Those are really challenging things, and managing the people side of a business is really hard. A lot of founders haven't hired and fired before, haven't gone through the process of trying to get the most out of their team. It's a learning curve for everyone.
Yeah. Well, Todd, thank you so much, man. You're dropping a lot of gems this episode. I'm loving our conversation, but hang out with me. We're going to take a quick break for a few messages from some of our sponsors. Support for the 614 Startups podcast comes from Book and Street. Book and Street provides finance and accounting solutions for startups in the Midwest and beyond. From strategic financial support to bookkeeping and everything in between, they've got your back office covered. Let their experienced team of finance and accounting professionals help your startup get it right from the start. Learn more at bookandstreet.com and set up your free 30-minute consultation with their team today. Support for the 614 Startups podcast comes from Nationwide. Nationwide's mission is to protect people, businesses, and futures with extraordinary care. To help fulfill that mission, Nationwide is looking to invest its $350 million venture capital investment fund in InsurTechs that will help them create new and exciting products and solutions to meet the needs of their customers. If you're interested in partnering with Nationwide's venture capital team, visit nationwideventures.com to learn more. Again, the website is nationwideventures.com. Nationwide is on your side. 614 Startups Nation. Thank you guys. You're hanging in there, man. This is a fascinating conversation with my guest, Todd Fetterman of North Coast Ventures. All right, Todd. I was privileged to get the invite because, I'm a VIP now. I get all the invites, right? And I was part of the annual meeting for North Coast Ventures. Absolutely fascinating. Very well done. I was taking notes like, yeah, one day I'm going to do an annual meeting like this. Excellent job. Great presentations all around. But what did that annual meeting mean for you? Did you feel like you guys were hitting an inflection point? Because I certainly got that energy from the meeting. Let's talk about some of the startups that were featured as part of that meeting.
Absolutely. So the annual meeting does a couple things for us. One of them is just to highlight some of the companies that are in our portfolio. I should say the annual meeting has really taken on a different form for us in a COVID environment, and probably will be changed forever. The annual meeting used to just be our investors, right? We would ask our investors to show up. We would provide them more substantive reporting, report outs on the portfolio. What we found, though, is that that's not necessarily what everyone wants to see from a live event. What we do now is we get them substantive reporting the day before, let people address the questions that they have, and use that meeting as really a showcase for people to get to know the portfolio companies a little bit better, to have many hundreds and eventually thousands of eyeballs on those companies so that they can help open doors, make introductions, and get a better sense of what we do so that they can be more helpful over time. So whereas initially we would get a couple hundred people at our annual meeting, there were over 500 people who saw the annual meeting either live in that moment or on YouTube the next morning. And we think it'll be up above 1,000 before long. So that's a lot of exposure that, in this case, these 5 portfolio companies had to tell their story. Now it's a higher level story, right? When it's open to the public, they're not going to dig into the financials and share all the details, but it's an opportunity for them to say what they do, who they solve a problem for, and importantly, how the investors and entrepreneurs can help. And we hope too that it provides a service to other entrepreneurs to get a sense of, here's what a company that has $1 million, 5 million, 10 million in recurring revenue looks like, right? Here's what that progression is, just as a model, because I think sometimes it's really unclear what you have to look like when you're a later stage company. And so having those points is really powerful. We also had a nice conversation there, a fireside chat with the CEO of KeyBank, Chris Gorman. That's a really important part of it too, because it reinforces what we think is our secret sauce, which is our ability to open doors and create opportunities for our companies. And we think the idea that a large, many tens of billions of dollars publicly traded company like Key, the fact that they're interested enough in what we do, innovation and development of great companies here, is important. And in that conversation, I think we found that they realized how important technology is to them, where embedded finance and other aspects of mobile and digital banking are going to take them, and where they have to be, how they have to go to compete. So it's a really interesting application to see those startups and also a really mature company and where the intersection of those is. So, the annual meeting's a lot of fun. We put a lot of time and energy into it, and are hopeful that it helps provide more momentum for all the companies that participate.
Yeah, let's do some name drops. Who are some of those companies?
Yeah, so it was a wide range of companies. One of them was Able. And for Able this year, it was a victory lap because they had an exit a few months ago. This was a business software company that helps staffing companies onboard, right? So instead of a paper process, it speeds up getting people into the system, getting them to work. It creates more revenue opportunities for the staffing companies, right? We like backing companies that create more revenue opportunities for their customers. And this company sold to Bullhorn, the leading staffing software company in the country. It was a really interesting situation because this spun out of Alliance, which was a large local staffing company in Cleveland. They built software to solve their own problem, realized there's a ton of value there, spun out this company separately. We invested in it, Jumpstart invested in it, Rev1 and Columbus invested in it, Plymouth Growth from Michigan deployed capital. It was a really nice example of just good team, good idea, a 4-year run, right? It doesn't always happen in 4 years. 4 years is fast to get to an exit, but it was a lot of fun. And Gerald Hetrick, the CEO, got to share the path and the story that they're on. And we also heard from, to give you another sense, a company called Alvier, a company that is an embedded finance company, which basically creates banking as a service opportunities for big brands. So it allows brands like Boost Mobile and Dish Network to offer banking services to their many, many millions of customers. This company came to the realization that 1, they can offer world-class banking services, and 2, it's a lot easier to offer them to somebody else's customers than it is to go get tens of millions of your own customers. So it's been a lot of fun. This company raised $70 million within the last year, and they have a big vision for how they're going to grow. It's a big swing for an Ohio company, a lot of international capital there and some international customers, and we're really excited to see how they grow.
Yeah, I mean, I was really, how do I pronounce that company's name? The second one, Alvier?
Alvier.
Alvier. Okay, I was really impressed by their CEO's presentation and the Boost Mobile example, because a lot of Boost Mobile customers are unbanked. That was kind of the big kind of a differentiator for Boost Mobile when they got started, right? It's like, hey, it's a low cost carrier, you can pay in cash, right? And they just saw the data, according to the CEO, of how many of their customers were just paying them in cash. Why not, bank those people, right? Give them an opportunity to participate in finance and move money around instead of dealing with cash all the time. So I was really, really impressed by that company. All right, so I want to broaden the conversation outside of North Coast Ventures for a little bit and talk about the ecosystem more broadly. Now, we're going to take a look at Ohio beyond Cleveland, right? As you look out to the startup ecosystem, what are some things that you say, wow, this is great, this is interesting? And what are some things you're like, this is unexplored, right? We really need to maybe step on the gas pedal in this direction if we really want to accelerate growth over the next 5 years?
Absolutely. So there are more opportunities today than when we started, to be sure. I think some areas have probably made more progress than others. Columbus has really been the head of the class over the past couple of years. It's been extraordinary to see some of these success stories, both at the early stage, also some large later stage financing, just some quality companies being built, and other companies coming out of those ecosystems, right? That is how it gets done, is that founders don't just land on the planet and decide they're going to start a company, right? I think the best founders have great experiences at other startups. They learn what works, what doesn't, what they're good at, how to manage a team in a software environment, and then come out of that company at the right time with their own ideas. So that's happening more organically now. That is exciting to see. We want to see more deals, though. We want to see more early stage opportunities. Most of these companies, as much as we want everyone to be successful, most of them are not going to get off the ground, and that's okay. That's how ideas work. That's how early stage companies work. And we're hopeful that if a founder starts something that doesn't materialize in the way they envision, they'll be right back at it very soon on the next one. We've funded many founders that were not successful in their first venture, that were wildly successful in their second venture. It's really the best training that you can have. So we're seeing a lot of that in Northeast Ohio. We see a lot of healthcare IT and digital health, which is something of great interest to us. And we're also seeing a lot of insurtech. We have great relationships and a number of our investors, our executives at Progressive Insurance. We've obviously connections into Nationwide, in Columbus, and those kinds of ecosystems really breed more opportunities. So, that's really exciting. Then the last thing I'd mention ecosystem-wise that's exciting is just that the corporate community is more willing than ever to take introductions and get engaged with startups. So for a while, no one wanted to work with a startup, right? They don't have any money. They're high risk. They're early. I'd rather work with a much larger company. It makes it really hard. I think there's been more of a culture of openness to working with startups. Companies realizing that they're not just going to grow organically. They're going to have to figure out how to build something or buy something or partner, right, to actually do better in their core businesses. And we have found, perhaps through efforts of ours, perhaps through success of the ecosystem overall, and maybe just a little bit of luck, that companies are a lot more receptive to this. So, we really take an effort to open doors for our companies. If we have a good company, our view is we should be able to make 20 introductions just to Ohio companies that can be their customer. So if it's HR tech, look out. We're gonna reach out and we're gonna open doors. And if nothing else, they'll get voice of customer. But in many cases, there are a lot of customers that come from that. And we are really excited about how so many companies are embracing that. And we think that'll make it easier to start and to grow a startup in Ohio.
That's great, Todd, and I agree with you on a lot of those points. So, I'm kind of getting out from behind the desk, and I'm now going to do stuff in the community. Right now that things are opening back up, we're getting into the event space. So, we have a very interesting conversation called the Founders Fireside Chat, where we're going to get together with some of these large and fast-growing startups and have a conversation. And then in May, we have a corporate venture capital mixer. Right, talk about getting people out of their ivory towers and down here with us peasants to interact with us, right? And really talk about how does corporate venture interact with the startup community here in Columbus. So And then next week, I'm going to be up in Cleveland hosting a panel in your city. So I'm going to definitely look you up and send you details for that. But
I'll be
before we
here.
close, before we close, what are you excited about for North Coast Ventures for the rest of this year? What's next for you?
Yeah, so I guess it's two things. One is that we're spreading our wings a bit beyond the state. And so in addition to companies in Cleveland and Columbus and Cincinnati, we're very aware that Pittsburgh's just as close, Indianapolis is just as close, Detroit is just as close. And it's not just for us to say, hey, there's a wider set of opportunities, but for us to get smarter, for our entrepreneurs to have more connections to talent in these different cities. So we're doing more and more connecting and collaborating with companies in the region, the broader region, and also venture capital funds. We've, over the last 15 years, co-invested with over 100 different venture capital funds, private equity funds, family offices, and angel groups. And that brings a lot of thought capital to the table. And we really want to leverage that. We finished raising 2 funds last year, so we're a little more focused now on investing, helping those companies grow and getting them to a point of exit. We have a couple companies that we think are going to have exits this year. Last year, we were very fortunate to have 3 companies that crossed the finish line. And I think there's enough velocity now that we're going to see more and more. Now, the last thing is we're trying to be even more strategic and precise in that door opening, trying to have objective targets for being able to build relationships with some of these companies, trying to make sure we've got champions at many of these large companies, because we think that that will make us smarter, it will make our companies smarter, and give them a real strategic advantage. You know, in Ohio, we've got a lot of things going for us. Having more venture capital than anybody else is not one of those things, right? So if we're going to double down and we're going to say, what is something really we can do better than anyone else in the country to help accelerate our startups? I think it is connecting them with the customers in their backyard, the voice of customer in the backyard, those other groups that can accelerate them and get a little bit more of a village behind these companies. We're trying to drive that culturally, and we're trying to drive that in practice. So I think, and I hope you'll hear more about that this year.
All right. So you're the rich uncle right now, man. You got all the dry powder in the world. So how do folks get a hold of you? How do they get their startup, their story in front of you? So
we, one, they can just find us. 2, email me, todd.fetterman at northcoast.vc. We also have a really simple intake form on our website. It's probably 5 minutes. If there's something on there that you don't have, ignore it or put NA. The idea isn't to create more work. It's just to give us as much of a view of what you have as possible. We will try our best to say, hey, this is really interesting, or sorry, it's not a fit, as quickly as we can. Historically, we have not been as fast as we would like to in getting those responses out. That's one of our New Year's resolutions this year, is to really be as clear and fast as possible. And also to try to provide some perspective. But I'd say between reaching out to me directly, reaching out through that website, or if you know some of our investor members, it's a great way to informally connect, better understand what we're looking for, build a champion in our group, and kind of get to know us over time. I'd say to entrepreneurs, if you can, don't just come to us when you're raising money. It helps to come earlier, right? To have a higher level conversation. The market for short-term capital is never easy. The more time you have, the better. A group like us typically likes to run a 30-day process from start to finish to get to know people. And I think we're really hopeful that we can bring in out-of-state investors too, right? We don't have to write the whole check. We don't want to write the whole check. We want more people at the table. We'd like to help connect entrepreneurs with seed stage investors out of state also, so that they're more likely to get to a Series A. And when they do, they've got more of a village around them to help them with that next round. We found that we're more likely to be successful if we've got great partners at the table. And the earlier we can engage with entrepreneurs, I think the better chance we have to do that. Well, Todd, great conversation. Thank you so much for taking your time to spend it with me. Folks, you heard it, man. Todd has a lot of dough. All right. And he gave out his email. So use that email. I close every show with my one takeaway. You said this multiple times, but sometimes when something gets said in such a subtle way, it gets glossed over. If you're a founder out there and you are evaluating investors,
make sure you're asking the question about their ability to introduce you and connect you with customers. Getting customers is hard already, right? The value of investors in your company should not only be capital. Make them earn it by helping you grow your company. All right, folks. Hopefully that was time well spent. This is the 614 Startups podcast. Hope to see you again. Until next time, peace. Support for 614 Startups comes from Color Coded Labs. It's time for a better career in tech. Introducing Color Coded Labs, a 16-week boot camp that does more than just teach basic code. It's a program designed to help you actually get a career in tech. At Color Coded Labs, we've removed all the barriers to help you learn the skills you need to start a career you love in weeks, not years. All designed for people of color by people of color. Apply now at colorcodedlabs.com.